Good morning, guys. So, majority of the traders that choose that take the poll suggested that they want to learn the strategy more instead of me sharing signals. But in order to bring a little balance, I will be sharing like the trades I have take over the week after I take them, and even some of the tricks I will be sharing them with the group before I execute them, at least so that you can learn the strategy better. So I'm just trying to do a quick video for the new members of the channel. So if you're a new member, you just have to go from the beginning of the channel where because that was when we start with this strategy, and we have refined it over the time, over the months, over the years. We have refined this specific strategy to suit our trading style. So this is just the trades I have take this week in GU. I think I've took total of 4 trades on GBPUSD this week, and I want to share with you guys the reason behind me trading this pair this week. So as you can see, this was the first day of the week, Monday, 6th October, and immediately after Eastern session, post Eastern session, we saw a market took Eastern session liquidity during London session, which is what happened often. And if we see a clear liquidity grab, we normally tend to wait for a change of character, which is what happened here, retracement, and then we'll go for short for 1 to 2 risk to reward ratio. But the reason this day was not the same was because we have this imbalance right here. When the week opened, there was this huge gap, and from what we observed, price normally come back to fill the gap before maybe going low, if it's going low for the day or if it's going low for the week. So this is what exactly what I analyzed and what I was waiting for to happen. So, and as you can see, during London session, the price grab London session liquidity during early New York session. As you can see, we executed this trade 1:30, which is exactly when New York session is starting. So after liquidity grab, I wait for candle confirmations, and as you can see, this candle we inverse this bearish fair value gap, which will show you that like the trend is trying to change. So after we inversed this bearish fair value gap, we have this huge bullish candle. I won't call it that huge, but as you can see, we have the candle and we have retracement. So and as soon as I see the price is willing to go up again, I executed here and I targeted this liquidity here, but as you can see, price filled the gap even before it start to retrace. So this was my first trade of the week, which was on 6th October. And I also traded the next day, and as you can see, immediately price took this gap, price start going down, 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 down. And we have this previous day liquidity, the previous day high and the previous day low. And as you can see, this was what happened. Price took out the previous day low and it was going down. So I just entered for a quick retracement because I know even if the trend will continue going down, we'll have this thing a retracement. So at the time I entered this trade with hoping that we will have retracement to at least this fair value gap right here, this fair value gap right here. So I did not even I did not even anticipate for 1 to 2 risk to reward ratio at first. But when I see price was rallying up, so I know price will might reach this fair value gap. So I changed my TP to this fair value gap, which is exactly I think 2.27%. So this was my second trade of the week, and it's all about liquidity. As you can see, we'll take liquidity and change direction. And if you change to 5 minute time frame, you will see a clear 5 or 1 minute time frame. You'll see a clear change of character and retracement to a fair value gap before this trade. Because I stayed strictly to 15-minute time frame, that's why. Okay, but you can go and research and you'll see that there is a clear change of character and retracement on smaller time frames, probably the 5 or 1 minute time frame. And after that, this was my third trade of the week, which was on Wednesday. So because of this, the previous day was a bearish. You see the price is coming down. We have a retracement during New York session, and it's still coming down even through Asian session. So as soon as I saw this retracement and liquidity grab, I was expecting that we will have another bearish day again. So as soon as I see that, I see these two candle rejections, I went ahead and execute. I went ahead and execute for a 1 to 3, and I target the Asian low. But as you can see, price went ahead, respect this bullish fair value gap, and went ahead and stopped me out of this trade. And after it stopped me, it went on and take liquidity, coming back to this fair value gap right here, and then going down. So I did not get the opportunity to trade again because I think I was out, and I was also trading another pair this time. So I just don't want to open myself to this kind of risk. So I did not trade again. I just went with a 1% loss on Wednesday. And as you can see, the trend is still down, down, retracement down. So after this happened on Thursday, we have another bearish trend during Asian session. So what I did was I came here and marked this fair value gap. After I marked my previous day low and previous day high, as you can see. So and the price came and took this low at first. So after I took the low, I can see there is bearish, bullish movement, but with respect of this fair value gaps, I did not trade. I did not go. I did not long the market. So I was waiting to see if it will respect this fair value gap. Had it been, I saw something like price coming to disrespect this fair value gaps, maybe closing here, then I will enter on a retracement and target for long, at least to with the high. But and because the trend was bearish, and I saw that price respect this fair value gap by giving us this big wick and a candle confirmation, I just went ahead and execute a trade here with 20 pips stop loss, and I targeted this low. And I think my TP was even 1 to 1.5%, and I leave all this cash on the table because I was just not ready to I did not kind of have confirmed entry, because what I would expect was at least if price open there, we will take this essential liquidity. Had it been we have this, then I saw maybe a change of character, I would have gladly waited for a retracement. I would have gone for my normal 1 to 2 risk to reward ratio. But because this is not a plus setup for me, so I just targeted this London low. And this is Friday. This is the current price action, and as you can see, we have already took this low, but I won't say we are going up because the trend is still bearish, as you can see. So we will just have to maybe read price action for a little bit, probably even wait for New York session. And today is Friday, so it's actually a short day. We might not even trade at all. So I hope this video helps with at least understanding some basics, and you can send me any questions you have regarding the strategy.